Hi everyone, welcome to episode 50 of the Startup Playbook Podcast. My name is Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they used to succeed, and their advice to current and future entrepreneurs. Before we get into this episode today, I just wanted to say a big thank you to all of you for listening, downloading, and supporting the podcast over the last 10 months. There's no way the podcast would be where it is today without all of you. To celebrate the 50th episode milestone, I wanted to do something a little bit different, and in this episode, I've gone back and done short follow-up interviews with 6 of our previous guests, checking in on their progress, their learnings over the last year, and diving deeper into some of the topics we discussed in the original interview. First off the rank is Tom Ellis, the investment director of My Capital, a VC fund that invests in opportunities looking to expand into the Chinese market. I first interviewed Tom in episode 17, where we spoke about his experience from both sides of the table, and what he looks for in investment opportunities. In this follow-up interview, we talk about finding your strengths, the need to ask for help, and the importance of listening. Hi Tom, welcome back to the Startup Playbook Podcast. Thanks a lot for taking the time to be here. I know you've been traveling a lot the last few weeks.
Yeah, that's true. I've been in Israel, Hong Kong, China, Japan, London for a few hours, so it's been quite hectic. And also congratulations on the 50th episode. So it's nice to be back.
It's great to have you here. So so for those for those people that potentially didn't listen to the 17th episode that you were on, do you want to give a quick sort of breakdown of what My Capital is and what you guys do? Yeah,
sure. Like, quick plug, go back and listen to episode 17 and all subsequent 49 episodes to this one. They're all great. So I'm the investment director at My Capital. We're an investment company with venture capital and private equity interests from Australia looking to break into the market within broader China and Asia. The focus is really about adding value beyond capital. Friends of mine were recently talking about the value of VCs and investors, and we firmly believe that it's got to be more than just capital. So we provide networks, distribution, strategy, and advisory sort of components, as well as the capital to fund it. So we're like an active manager in terms of growing people into the market within Asia with a focus on China.
Sure.
That comes from our networks, from our partners and my advisors who are quite senior within international business, and that really gives us a unique lens to be able to get on with doing it rather than sort of talking about growth and some other things. And we love it. We're all aligned. We've got 12 staff in the office, and we all sort of have a real passion about creating and driving business into what we see as a frontier for Australia.
Sure. I mean, one of the most exciting things for me of doing this 50th episode and going back to some of the previous guests is just kind of seeing how things have evolved. And we were just talking before we turned the mic on about how there's been a tightening of the focus at My Capital. So can you share a little bit about what that focus is now and what were some of the reasons behind that?
Yeah, great question. I think it's something that sometimes gets missed. You know, when you build any company, whether it's a startup, a scale up or whatever, you always start with kind of a remit and test the market, which I'm sure all of your guests talk about. For us, we've got a ESVCLP, early stage venture capital limited partnership for those playing at home, which is an investment vehicle that the federal government signed off on and said, hey, you guys are okay to invest in stuff and get a discount and tax-free sort of status on that. We have 5 sectors that have been approved on that. So healthcare, agri, logistics, education, and clean tech. So what we found is looking at all 5 sectors, it spread our team too thin, and we weren't really having the right depth of seeing the opportunities we wanted to see. We saw, over $2 billion of opportunity last year, and we found that for us, with a focus on expanding into China, there was too many things sort of all over that as a cross-section of investing, from sort of a $200,000 check to a $20 million check. So our investment committee, which I sit on, and I decided that we'd really focus on healthcare and agriculture, being the 2 sectors that Australia's really traditionally had quite a lot of strength in, and really try and get some good case studies away in that 1 to 5 mil check size, really to build out that China story a bit more, because we've got a fairly good capital base, which means we could do all of those sectors. But but it's important for us to add that value from a strategic standpoint, and that comes from sort of starting in a couple of sectors and getting on with delivering. I spoke at Oz Biotech in Shanghai recently about the importance of focus, and it's also been great because we've got far better opportunities in where we can collaborate rather than just sort of things that are looking for capital as part of a larger pool. We're being asked and looking at things actively that are much more aligned with our ability to add value, not just capital.
Sure. So speaking of being really sort of focused and honing in, one of the things that really struck out to me during our first chat on the podcast was when you mentioned that it's really important for you to be good at something. And I think that's one of the biggest things that I've kind of learned through my own journey is there is no shortage of opportunities out there, but it's not about how many opportunities there are, but what the right one is for you. Do you want to share a little bit about extrapolate a little bit further on what and how someone can find what they're really good at and what the right sort of fit for them is?
It's a great question. It's sort of probably something great for listeners as well as you and I to talk about. It's that thing around, even if you finish high school and you've got a mark, the opportunity of what you could go into is virtually limitless. You could go and work at a cafe, a bar, travel, and there's almost that paradox of choice where you get fear about any decision, and not making a decision is also a decision. And I think what I've seen from business, having built a couple and been part of several, is that inaction and paralysis is quite common. So I see from a lot of early stage companies that by not being 100% laser-like focused on something, you kind of allow this bubble around you where people interpret it how they want and project it back on you, which means that while you're working it out, you're kind of taking in everything from everybody else, and that someone will say, oh, that's a great idea, and you go, oh, but do you mean this? And you're like, sure, I mean that, and explore it a little bit. And I think that comes back to the founders that we're really interested in, are those that kind of have a sense of at least the problem they want to solve, and are open with the mechanism that they're going to solve it with is not yet fully developed. And I think that you and I have caught up on it a number of times about that, and I think the part of it is about being open to not being sure, almost a known unknown, identifying that you're not sure and saying, well, a process to go through that is, one, and I think I said this to you, talk to everybody in the industry you want to be in and actually sit down with them for an hour and get to know them, because that way you'll find out if it's not what it says on the box, why, which are the parts of it that you love, and is the problem that other people are experiencing the same as your experience of it, and is it then big enough for you to go and solve? I think that's the biggest thing, and one of my mentors said to me, he talks about the 50 coffees, and this is something that Tim Ferriss speaks about as well, but he's built a business worth, I think the enterprise value is a bit over $250 million, so he tends to know what he's doing. And he said, if you spend $100 sitting down and taking strangers for coffee to tell them about their idea, or people within the industry to ask them about the thing that they're an expert in, you will, by the 15th coffee, have a sense of whether you're onto something or you're not. And I think within that work up front is something that some people don't do. They just kind of, I've been guilty of it in the past as well, of starting in the middle and then going, hey, let's go build a business. So I think that's a technique I've used and I tell other people to use around, you don't necessarily know the problem you're framing to start with, and the research around, I think there's something here. Even if it takes years, it's often the ideas that sort of come to you bit by bit that end up being the greatest, and it's almost that itch on the roof of your mouth. You keep seeing it or talking to people at barbecues or at events and things, and that's where I think the greatest problems come out of.
Yeah.
I don't know if you've seen that, but
yeah. Well, I mean, and you just touched on this as well. I think we've caught up several times where you've kind of helped me navigate through things, and I think that was another thing that really kind of came through our first discussion as well, is just founders asking for help.
Yeah.
There's that whole kind of mentality of we have to tell everyone that everything's fine and everything's we're growing amazingly well and whatever, but the reality is that there are a lot of challenges and that's kind of across the board. But just knowing what being open to saying that I'm unsure, as you said, and then going to the right sort of avenues and channels for people to kind of help you disseminate that.
100%, and something we've been I can't talk too much about it, but there's a thing that we're in, and we've been working with them around a strategy for China, and it's a completely sort of adjunct to their core business, and that's been really exciting for them to take on board from experts, the best way to tackle that, and also being able to then sit down with decision makers in that procurement cycle and sort of get FaceTime and say, well, hey, here's our way of solving the problem with you, and really road testing that. And it saved them 2 years, and that's kind of, I guess, a great, hopefully we'll be able to share more in the next sort of 8 to 12 months, but we're really proud of the progress we're making there with the company, and we're getting some great results. But again, it's about why that team is so strong, is their ability to sort of go, well, hey, we've got a good baseline of growth, and to look for it elsewhere, we need to do some things differently. The way you attack each market is different. And the problem that you solve in Melbourne might not necessarily be exactly the same way you solve it in Sydney. And I think any company that's scaling goes through this, and it's about the right people and the right feedback and the right communication flow to be able to entrust people to give you that right feedback. Whether it's a large corporate, sometimes they talk about internal disruption and things, and it ultimately comes back to listening to people. From what I've seen, and who do we have within our team and broader environment that can provide a different way of solving this problem? And I think that in any company, in our business, from the chairman of the board to our most junior researchers who come in a day a week, everybody gets a voice, and we do it in a forum that enables that road testing of problems and, I guess, seeking of solutions through communication.
Sure. And speaking of solutions, again, you kind of touched on this a little bit earlier, but especially when it comes to the VC or the investment community, if you have a good idea, there's really no shortage of options these days in terms of which fund you want to go for, which investor you want to sort of bring on board. What is it that a founder should look for in an investor, and what should that relationship ideally look like?
It's a really interesting one, and whether people know this or not, almost every investor in Australia knows each other, and we do talk, we catch up around things that each other likes so that we can refer business back and forth. So, I think it's really important that people understand that investors can be your biggest advocates to other investors as well. There's some great firms in Sydney that I've got really strong relationships with, and we invest in different areas, and they're clear that if something has a China interest or is in our sectors, that we'll have a real look at it and even provide them feedback. I think a big part of it is about what a potential investee company is looking for. If they're looking to tackle a global market outside of Australia, there's a few firms that are great at that. If they're in e-com, Blackbird are really strong in that space. If it's in, I guess, SaaS, the guys from Airtree are really strong, having a really great group of partners that have connections into that space. And when you look at the China market, we're actively working in that space. We have sort of offices, that we share in Hong Kong, Shanghai, Shenzhen. We're there. We're not kind of spending 400 days a year or 360 days a year in Australia. Like I've spent 13 weeks in China in the last 12 months. We're there, and I think that gives us a view to make comment rather than, just kind of something that we've read on
headlines or
and I think the nuance of doing business, and having been to Israel recently, seeing that you really need to know people that are operating in that market to be active in that market. I think that was a great way of, I guess, condensing that whole statement about China. And I think for an investee, it's important to understand what you want from a partner. Sometimes there are capital pools that are really great at first stage, and accelerators and incubators can be phenomenal, but you also need to be clear on what you want to get out of that, the questions that you want to answer, and the tools and techniques and skills you want to build through that process. And I think that it starts with kind of looking at where the gaps in the business are, not just saying, hey, we think we're a flight-based thing, so we should apply to the Qantas accelerator or Qantas scale-up or whatever that looks like. It's about saying, well, our problem is actually within your internal team, so we might look at some HR skills and who are the best people in Australia that can teach us that, and how long does it take, and how do we invest our time to ensure that the capital return at the end is significant.
Sure. And final question for this follow-up interview. Since our sort of interview I think it was in October last year, so about 7-8 months ago, what's the biggest learning that you've taken away?
I think part of it's really been that sometimes, slowing down, slow is smooth and smooth is fast. If you analyze the opportunities and spend the time, checking your thinking and road testing it, you can then out innovate, and it starts it's an extension of the point earlier about asking people for help and framing it at the start. Everyone wants to help, so approaching it with enough caution to be well planned then makes the rest of the process smooth. And smoothness is quick, and it means that you can scale fast. And we look at how you can replicate your business, how you can get to a critical mass, and the IP you have is really the team and the people around it, and that should be something that no one can replicate. So there's some process and things around that, taking the time up front, that I think is a great reiteration of learnings I'd had previously. But I've seen the people that we've been actively following, and the term sheets we've put out have been around companies that have framed that problem in such a strong way that they leave the room and you're thinking about it for days, weeks after. And I think that being specific in what you're looking for and what help looks like is really important. And also that, I guess, when a company takes on feedback and comes back to you in time, it's always great to see that whether you invest it or not, that they're open to feedback. Then I think gives a greater chance of you advocating for them to other people. And I think the other thing is really that what's been reiterated by spending time with the likes of Dave McClure in Japan and talking about our ecosystem, it is in a lot better shape than we probably internally think. I think that the parochialism's a bit of an issue around like Melbourne and Sydney and Brisbane. People talk about China, they don't talk about Shenzhen and Shanghai, and that's 20 times the size. In Israel, they talk about Israel, not Tel Aviv and Jerusalem and Haifa and Japan. It's Japan. It's not Tokyo versus Okinawa. I think that ownership of innovation from an Australian perspective is something I'd like to see more of. That brand Australia, because when we travel internationally, people don't go, oh, you're from Victoria or Melbourne or Sydney. It's going, oh, you're Australian. And if we're somewhere and there's other Australians, we're all from Australia. It's not going to be a parochial issue. I think that I've been seeing an opportunity for us to collaborate on an Australia-wide level a bit more. I hope that is insightful to some people.
Absolutely. Tom, once again, thanks so much for taking the time today to be on the follow-up interview. For anyone that wants to get in touch, follow up, what's the best way for them to do that? So
we're all over Twitter and LinkedIn, so you can get us at MyCapital or the website mycapital.com. There's a form field there. We do get every email. I have a team that makes sure that we see everything. If we don't get back to you, we will. Even if it's just an overview of why it's not fitting within our parameters. But feel free to reach out, and looking forward to following you, Rohit, through to another 50 episodes.
Fingers crossed. Cheers. Yeah. Thanks a lot, Tom.
All right, thanks. Bye.
Next up, we have Matt Allen. I interviewed Matt in episode 28, where we spoke about his experience as a tech recruiter and his advice on how to find and attract tech co-founders. Matt has recently taken on a new role as the Startup Business Development Manager at AWS, and we chat about the startup ecosystem, building networks, and being authentic. Hi, Matt. Welcome back to the Startup Playbook Podcast, and thanks so much for taking the time to be back on the show today.
Oh, thanks for inviting me back. I feel honoured and privileged.
Not at all. I think you were one of the most downloaded apps until Nick Crocker dethroned you.
Bloody Nick Crocker.
So we'll have to kind of get you back. But we were just kind of talking briefly about almost when we spoke last time, you were still doing the tech recruitment side.
Yep.
And we were almost talking about your career change up until that point.
Yeah.
And now since then, you've taken on a new role. Do you want to share with the audience what you're currently working on?
Yeah. So after 4 years or so of recruiting and being I think, relatively successful in that space. I've now joined Amazon in the Amazon Web Services division as the Startup BD here in Melbourne. So my team consists of 3 of us here in Australia and New Zealand, and 100 globally, and our entire job is to help find and grow the next amazing company. You know, we point to the Atlassians and Canvas of the world, and you know they're all startup once, and our job is to find them and look after them and do everything we can to help them.
Fantastic. So the first question that I have for you is actually being submitted by one of our listeners. So Kyle Walker, who's the founder of Benefit Health, wanted to know, and I guess kind of assuming, looking at your sort of background of being an angel investor, being in the tech recruitment space, starting your own startups, and now with Amazon looking at the entire ecosystem community, how have things developed over the last few years, and where do you see them heading ecosystem-wise and community-wise over the next 5 years or so?
Yeah, that's a really good question. It's I think the community is actually maturing. I think there's far less people asking the extremely naive questions. I imagine that's because things like your podcast and the amount of blog posts, and anyone who knows how to use Google and can ask the kind of right question should be able to get those questions answered pretty quickly. Going to some events lately, and the maturity of the startups pitching, the people in the audience, seems to be that people are now realizing that you can't just rock up with some random idea and start spraying it all over the place. You have to do a little bit of work to try and figure that out. I think we spoke about that last time.
Yeah.
And the ecosystem, look, as startups become, we'll call it slightly more mainstream, more people who maybe haven't had the technology background are starting to think about them, and there's people pent up in their corporate jobs, not liking life and wanting to get out. The ecosystem grows and expands. They're not all good actors. There's a bunch of people who, seem to be out there taking advantage of people, trying to help them raise money, in quotes. I heard someone the other day that gave 7% of their company away to the person who introduced them to the people who raised, who hit the money. That's a lot of equity to give away. People that are spending $150,000 on an agency to build an app, that they don't even know whether there's going to be a market for it. So there's people who will take your money and provide questionable value. So filtering those out, and as the ecosystem grows, there's always different types of actors in it. The flip side of that, I think that the good guys are getting better. So if you've been in the ecosystem for a while, if you help people, if you're known to be someone who helps people and doesn't take advantage of things, then I think that capital is growing at a non-linear rate. I think that it actually, for people that have been around for a while, that go out of their way to make sure that when they say they're going to do something, they do it. It's starting to the compound interest on that is starting to pay off now.
Yeah. So just kind of going back to, you think there being a little bit less naivety in the people that you're sort of meeting. Do you think that's a little bit to do with now we've just sort of started to get a much larger pool of people who have at least who have been there in the ecosystem for long enough to kind of learn those lessons themselves to feed that through?
Yeah, I think that's definitely a component of it. I think that there's just more educational material. The volume of material on the internet available for you to go and figure out, the things I need to do before I go talk to an angel investor. There'll be a million listicles out there to go and read. And if you read them and don't listen to them and then start asking those same questions in a crowded startup event, like that, it'll go down like a lead balloon. There's enough stuff for you to do the first portion, whatever you define as your portion, before you sort of start having those conversations. I think that's just, again, anecdotal, just my observation. But maybe I'm also in a position where there's already been some filtering done. I'm not 100% sure, but that's just my view.
Sure.
As of today.
Sure. And I know this is something that we kind of talked about in the first episode briefly, which was the concept of kind of really giving value to people and sort of building up that network that way. I know that's something that we were kind of just sort of talking about before we turned on the mic as well. But again, can you kind of share what like as you said, there are a couple of different players within the space. There are people that are looking to take advantage, and there are other people that are sort of there to genuinely sort of provide value. How does someone who's new to the ecosystem, I guess, filter between the two?
Yeah, I guess it's there's a lot of different answers to that question, but for me personally, if I meet someone that I can help, I just try and help them, and a lot of the time it's because I know someone who might be able to help them, and if you can avoid being transactional in nature, if you avoid saying, yeah, I know someone who, I know a customer, or I know an investor, or I know something, but before I do that, you need to pay me, or we need to come to some sort of agreement where if I do this, it's all going to work. Like that's, especially if that's a very new relationship, like that's if anyone, that'd set off red flags for me. I'm like, hang on a minute, and the way I'd counter it is I'd try and help them. Like, okay, cool. Well, how about I do something? How about, what do you need? What can I do for you? What kind of people do you need to talk to? Who do I know that, would be interesting? And then as long as they pass my quality filter, then I'll make that. Again, double opt-in intro. I think we spoke about that. Make sure that you've got everyone sort of on the page before you drop something in someone's inbox.
Yep.
But yeah, I'd be looking for some sort of signal that says, that doesn't say, I've just met you, I think I've got the things you need, you better pay me right now. Even in my recruiting career, that's not how we did it. There's plenty of people who do, but that's not how it works. Like it's not how it works if you want to stick around for a long time. If you want to go fast and probably make some money in a short-term arrangement, then by all means have a swing at it. But I do not believe it's sustainable in the long run.
Yeah, absolutely. And I think one of the big parts of that is reputation matters a lot, especially in such a, we assume big part of the startup community that it's really big, but to me it's almost like an underground community at times as well. And all of those things of like, whether you're authentic or not in your ability to deliver value, and all of those things really matter.
Yeah, I truly believe that you've really only got, one outward facing thing. By all means, deal with your own internal demons, but ultimately, a lot of the leadership stuff that I study and practice is, the example I always use that if you're under pressure, if it all goes to shit, and you've got people around you, staff members, or whatever, and you're a different person, then they're always going to be like, you're different now because it's all gone to custard. But if you're just the same kind of person all the time, then at least they don't have to question as to what's different, what's changed, why are you behaving that way? It's like, I always behave this way. Now, if you always behave that way, it's gruff and grumpy and whatever, then it's probably not going to be good. But ultimately, variances in that kind of thing is difficult for the people around you to deal with. So authenticity and just being who you are, I think, means that people don't have to worry about the other side of the argument.
Absolutely. And I guess one of the biggest things about you as well is that just the really strong network that you've sort of built up over the last few years. And I know that's a question that sort of gets thrown around a lot. Generally, if I'm new to the ecosystem or I'm new to the space, how do I start building that network? Do you have sort of any advice on for anyone that's kind of in that position at the moment?
Yeah, I think I've always been a connector, even before, so I remember before I was a recruiter, when I was just a dev, I'd go to meetups, or I'd run meetups, or I'd attend meetups, and you just ask people what they're doing and whatever, and you're like, hey, I know someone who's in a similar space to you. You don't even have to draw any kind of, you don't have to do much more diligence than I think you and that person would have something to talk about. You do that, and then you sort of make an introduction, and you sort of disappear into the hedge, and you do that often enough. And if you do that often enough with the best intentions of both people in mind, without you trying to inject yourself into the middle, then it's hard for that not to come back later and go, oh, I met that guy at Matter, and he introduced me to that person, or he was the one who said hello to me at that event. So for me, going to events and saying g'day to lots of people and just saying hello and asking about what they're into and what they're working on at the moment, or what they do for fun. I guess that's just asking and being curious. I think curiosity, people always love talking about themselves. So if and as much as people say I'm extroverted, I actually would prefer hearing about other people, especially some days at the end of the day you go to a meetup and it's been a long day and like I don't want to talk to anybody, but I can ask you a few questions and then just wait.
Yeah.
And I think that that's it's a multiplying effect. It's a non-linear thing. If you do nice things for people and then do that often enough, and they will refer back to you, and you get the flywheel effect. It works for SaaS companies. It works for people helping people as well.
Absolutely. I think one of the biggest things that you kind of just touched upon with networking is that it's not about you, it's about the other person more often than not. And I think where a lot of people sort of fall apart, whether that's in trying to build those relationships, whether that's for networking or with investors or with developing partnerships, what people go in with the mindset is, what can I get out of this particular conversation or this particular person, versus a lot of what you just mentioned was like asking them questions and figuring out how you can help them.
I don't have a whole bunch of wants and needs on a daily basis really. I'm pretty much under control. Even as a founder, I think that I was pretty picky with asking for stuff, and as you're building a network, it's not, I'm not sitting there thinking I've got a pile or thousands of people on LinkedIn that at one day I'm going to go and need something, because that's not how it works, right? If that's your intent, it's going to be as bad as asking for them right there. So really, it's like, I'm going to help all these people out, and they're going to go, you're really helpful.
Yeah.
And then sooner or later you can I'll tweet some random thing out or a question, and have just a bazillion people email me or whatever. So it's not. I'm not going, oh great. I've just put in 2 decades worth of effort so I can get my question answered on Twitter. That was not the intent. The intent was, you help enough people, and then if you have a question or you have a need, then they actually want to help you, as opposed to going, having to buy it or shoehorn it back in again.
Absolutely. Yeah, I think that authenticity is really key when it comes to all of those things.
Yeah, and I hopefully I've treated everybody, with respect and diligence and all that kind of stuff. It doesn't take a lot of time to do that. But it does take conscious effort. Especially when there's people who, they are new and they've got a bazillion questions, and they've got unlimited time and you don't. You've sort of deal with that, and especially when you're helping founders who are trying to raise money. I can't help everybody. I can't intro everybody to everyone. Like, there's a social capital element when I make an introduction as well. So, everyone has to sort of participate at the right levels to make sure it all keeps going. Otherwise, it'll fall over. Yeah,
absolutely. Matt, once again, thanks for your time today, and thanks for being a large supporter of the podcast.
No worries, it's my pleasure.
So for anyone who wants to find out more about you or what you're working on at the moment with AWS, what's the best way for them to get in touch?
Probably still just Twitter, at Matt Allen on Twitter. My email address is matt@allen.com.au. I'm there, I'm around, I reply. My workload has gone considerably up lately, but contact me and I'll get back to you.
Perfect. Matt, once again, thanks for everything.
Thank you.
Cheers. The third of our follow-up interviews is with Adir Schiffman. In episode 12, I spoke with Adir about his change in career path from medicine to business, his experience in starting and selling multiple businesses, and his role as the chairman of Catapult Sports, which he took to an IPO in 2014. In this follow-up interview, we discuss Adir's new model for startup structuring and some of the common pitfalls and fallouts from founder breakups. Hi Adir, welcome back to the Startup Playbook Podcast, and thanks for taking time away. I know you're travelling from tomorrow for a couple of weeks.
That's it, thanks Rohit, you're right. Yeah, nice to catch up again.
So really enjoyed our first chat. I'm not allowed or supposed to have favourites, but it was definitely one of the interviews that...
So used to that to all your interviews.
It was definitely one of the interviews that I personally kind of took a lot from and thought we kind of dived in on a couple of different areas. So highly recommend checking that out. But one of the things that I wanted to touch with you on was a new legal structure that you sort of helped create. I wanted to dive a little bit with you on why you kind of thought that a new sort of structure should exist and what some of the benefits are of what you're doing.
I mean, I'd love to talk about that. Like, basically, I've done a chunk of startups over a number of years. And so one of the things that happens when you start a startup is that you get together with some other co-founders and everyone is excited on day one, But 6 months or a year in there, you learn a few things. One thing that you learn is what the skill sets are of the people that you're working with, and you really don't know that on day one. And the other thing people learn about themselves is whether they really have the heart to do a startup, because it is glamorous on day one and deeply unglamorous on day 365. And so the problem is that under traditional structures, if one of the founders left, usually what happens is that they leave with a huge chunk of equity. And I don't really have a moral issue with that. I mean, sometimes it's not ideal from that point of view, but the bigger issue is that, one is you need that equity to give to people that you're going to bring in to take that role over, like a CTO role or even a CEO role sometimes. And the other issue is that if the founder leaves and they're not entirely happy about the way that they've left, maybe the other couple of founders or 3 founders felt like they weren't doing a great job, they can use that equity as kind of a blocking stake to cause all sorts of headaches. And I've seen startups die in these kind of circumstances that should have otherwise lived. The concept had some traction. And so the way that we set up a structure, and ABL, the law firm, helped me with this, Michael Dodge at ABL, the way that we set it up was we said, how can we create a structure that is tax effective, which I won't go into, but that is a massive headache. How can we create a structure that's tax effective? That means that if a founder leaves sometime within the first 3 years, they keep a chunk of their equity, but the remainder of their equity that they would have received goes to the founders that are still sticking around and slogging it out. And so again, that is tricky, because you want the equity that doesn't go to the founder that leaves. In traditional VC structures where there is what's called reverse founder vesting, the leftover equity effectively goes to everyone, including investors that have come in and invested. And so that is a terrible incentive, right? And investors got this incentive to get rid of a founder to increase their own relative equity. So this structure doesn't do that. It quarantines that equity, and it only goes to the remaining founders. And if the next year, let's say there were 4 founders, and then the next year there are 3, and then the next year there are 2, then it goes to those 2 that are remaining. So that's the way the structure works.
Yeah, absolutely. And I mean, as you mentioned, there are so many kind of drawbacks of someone walking away with equity. One of them also being that from an investor perspective, it's hard to put in money if there's someone with a large chunk of the equity kind of floating around.
And not involved, right?
And not involved.
I mean, investors hate non-active founders with 20% of the company.
Yeah.
I would be hesitant to invest as an investor in that kind of business. We tried to overcome that problem, which I think, we did it for a business called Quali.com, which is a startup I'm involved in. And then I kind of strong-armed ABL and I said, we should make this available because it solves a problem and help out the ecosystem. So I think they're pretty happy to do.
Yeah, absolutely. So, I mean, speaking of structures generally, what are some of the things that that startups at that very early stage, those kind of formative stages of, as you said, they're very excited and they're sort of putting things together. What are some of the things that they should watch out for and put in place to ensure that they're protecting themselves and the business?
So I think, seed stage and to a lesser extent Series A is where you tend to get screwed as a green startup founder, first time, second time. And so, I think seed, Quali, where Quali was at was we had some 5 or 6 enterprise foundation clients that had committed to some revenue, and there was an MVP product, but it wasn't yet a scalable product. And so, we were raising $500,000, we ended up raising $750,000. And so that's the kind of quantum. And so I think at that level, in an ideal situation, the investors are buying common stock. So what I mean by that is there's no preferences. They are sitting side by side with the founders. Obviously, that means that the founders need to have a reasonable valuation. You can't ask for a huge valuation and then say, but you should have no protections. But I also think, there should be no automatic right to a board seat. If you buy 20%, okay, take a board seat. If you buy 5%, don't take a board seat, right? There should be no special rights like vetoes. Basically, at that point in the cycle, an investor should be saying, what we think is these people are the right people to try and take this idea, which we think is an interesting idea, to market. And mostly what you want to be doing is they're supporting the founders and making them feel like first and foremost you're backing them. And I think that means common stock, it means no magical rights, it means help the founders. I think that, generally seed rounds should maybe raise somewhere between 15 and 25% of the equity post-raising, and keep the valuation reasonable. That's a trick that startups have to do is, don't try and do a $20 million valuation for a business that has got 20k in revenue.
Absolutely. And just finally, I mean, you've seen so many different businesses and so many different founders across that time. What are some of the commonalities that you've seen at that early stages where you think that relationship isn't going to work out? Are there any particular sort of markers that you look for, or that you've kind of identified trends that are sort of common between sort of relationships that don't work out?
I mean, the best founder relationships are always people that have worked together in the past. Like, there is no doubt about that. And actually, I think like people that have been friends on a personal level for years, that is not necessarily a good or bad marker. Like, that can end in catastrophe or positivity. It's a different relationship. Husband and wife or boyfriend and girlfriend, that can be good, that can be bad. Like, a lot of people are scared of that. I've seen it work, I've seen it not work. I think in my experience, like, the two things that you would look for if you were going to invest in founders are, have they worked together before, preferably in the domain that they're trying to attack now. And the second thing is there a mix of skills? So definitely, is there a technical co-founder? Like, that is fundamentally important. But also, are they all technical? Like, does one of them have some commercial background, or and so can one of them sell? That's an important point. So I think a mix of skills and having worked together, preferably in that domain in the past, would be the best founder combinations.
Fantastic. And so for anyone that wants to find out more about this legal structure or get in touch with you, what's the best way for them to do that?
So they can email me, and if they can't figure out my email, then they should not be emailing me. It's pretty straightforward. Or they can contact Michael Dodge at ABL, Arnold Bloch Leibler, who'd be pretty happy to talk to them as well, I'm sure.
Fantastic. I'll make sure those links are in the show notes, minus your email. But Adir, once again, thanks for the time and for sharing that quick sort of insight.
Great to catch up again. Congratulations on the show milestone. It's amazing.
Thank you very much. And thanks for being a big part of that as well.
My pleasure.
Cheers. Next up, we have Paul Naftalai. Paul is the co-founder and managing partner at Rampersand, a $50 million venture capital fund for early-stage technology startups. Paul was one of the earliest guests on the show, and in episode 5 we spoke about the investment process at Rampersand and the common ingredients of successful founders. In this interview, we talk about the things that attract and turn off investors. Hi Paul, welcome back to the Startup Playbook Podcast, and let's hope that we record this conversation this time.
It was good, thank you for the dress rehearsal. Thanks for having me back.
For those people listening at home, Paul and I had an amazing conversation yesterday that we thought that we'd recorded, but...
we're going to try and recreate it for you now.
Yes.
We'll make it even better.
Absolutely. So the first time that we spoke, you were actually one of the very first guests on the show. So first of all, thank you for being such a large part of the success of the podcast from the early days and supporting it from those early times. But around that time, you had just sort of announced that you launched your second fund, which was $50 million. And I just wanted to get an understanding from you on how you've seen the VC ecosystem and the Australian startup ecosystem evolve over the last year or so.
Firstly, thanks for having me back on, and also congratulations on getting to 50. I think this is a great initiative, and the feedback I get from people in the community is how much they value the advice and the people you've been pulling together, which is sort of one of the main things, I guess, that has changed over the last 12 months is the level of information, level of interest and activity that's going on in the ecosystem, which is really exciting. And when we first raised our first fund and then our second fund, and people would say, is there enough opportunity out there? And we were always confident there was, but the last 12 months since we last spoke has just reinforced how much really exciting confidence and ideas and executors that are out there, and that's grown really exponentially. I guess one of the things that's really encouraging, or there's a few things that are really encouraging that have changed over the last 12 months. The level of capital in the market has obviously changed. That's been well covered. There's probably not quite as much money out there as has been reported, but there's certainly much more than there was. And what that's done is a really positive redress of the balance between the entrepreneurs, the founders, and the money. It used to be, if you had a checkbook, people just needed money from somewhere, anywhere, and they'd go and fight for it. And it was never quite as dire as that for the best, but as a general rule. And now what we're seeing is there's this understanding that we as the funds or as the investors are as desperate for meeting the quality founders as they are for finding investment. In fact, often more so. And so this awareness that actually it's a dating game, it's a matchmaking game. Not every startup, no matter how high quality, is right for every investor, no matter how high quality. It's about matching them together. And we think that's pushed a level of redress of that balance, and now we're seeing a lot more transparency. It's certainly one of the things that we're really trying to drive and do it for ourselves is transparency around the kinds of companies that we could match with, the kinds of companies we're looking for, the way that we invest, the way that we assess companies, and as or more importantly than that is the value that we'll try and bring after an investment. So for some it's just, give us the checkbook and get the hell out of our way, and we spend a lot of, give us the check and get out of the way. That's a lot of what we do anyway, because we're, if your philosophy is to back founders, you want founders running their business. But inevitably they run into challenges and opportunities, and they need sort of advice or mentorship or help, or roll the sleeves up and get shit done, and that's something that some investors are prepared and well placed to do, others are prepared and not well placed to do, and others aren't at all, none of the above. So it's actually about putting founders in a mindset that says, yes, I want some money because that's going to enable some outcomes. Who's going to help me get those outcomes beyond the money? And then go and hunt those people down and build those relationships. And that's not everyone. And we've seen that the levels of confidence to do that have really grown, and that's really encouraging, and it's been forced by the quality of the founders that are coming through and the amount of money that's in the market. A couple of other really positive developments. I think one of the things is, we talked about, I think in our first podcast, was around diversity, and particularly gender diversity, and that was starting to enter the conversation 12 months ago. It's now very much front and centre. We're seeing whole organisations, we're seeing funds, we're seeing action groups around getting that diversity, and I should quickly, diversity isn't just about gender. That seems to hog the highlight. It's much broader than that. We're in particular focused on gender, but we do look at a bunch of other things as well. And we're still undoubtedly in a phase where there's a lot of talk, less action, and it's something that we're mindful of at Rampersand, but also across the ecosystem. But it's really encouraging that that's now front and centre. And what I think is important probably the important leap that takes it from lip service to actual action is that people are realising it's not just something to do because it's the right thing to do. It's something to do because it's the right thing to do, but it's also more effective. Better companies are built with diverse viewpoints. And that's why it's not just about gender, it's about everything. So that could be people of different backgrounds, commercially, culturally, environmentally, different ways of thinking, different mental maps, coming together to build a better way of thinking, and that's effective at a VC level, at an investor level, but also at a equally or more so at a company level. And we're still not seeing enough businesses with diverse founder groups coming together. That's kind of obvious because you build businesses with people who are around you, and you tend to have people like you around you. But we think that's entering the conversation. Certainly, as companies are growing and they're building out executive teams, it's something that every company we've invested in either is coming to us saying or is getting from us, this is something they look for, and they're building executive teams in a way that's sustainably diverse, which is really important. We think probably the glaring negative in the last 12 months since we spoke is probably the lack of government interest in what we do, but I think we would all say if anyone out there is building a business or building a proposition based upon having government support, change your business model, because it's not a sustainable let's leave it as a sustainable idea. Don't be reliant upon government. There's things that certainly we want more government attention and focus on in terms of supporting and building the ecosystem, but really it's incumbent upon all of us in the private sector to drive the world that we want and not wait for government to do it.
Sure. I guess one of the biggest things that I've kind of seen over the last 12 years is just the amount of funds that are now available. So both with existing funds raising further capital, as well as new funds that are entering the market. So the next question comes in from one of the audience, the podcast audience members. So Patrick Polk from the Esports Network wanted to know what is the biggest turnoff for an investor when they meet with a startup founder?
Thanks, Patrick, for the question. Look, probably the biggest turn-off is, let's call it thinking small, and something that where they're solving perhaps smallish problems, and that doesn't mean non-niche, non-specific, because there's some big problems that are very niche and specific. In fact, that's certainly the trend we're seeing, but it means sort of under-ambitious in their goals and their dreams and their objectives. That's one, and I think we'll talk about that a bit more, but the other one I would say, and we're getting a lot better at that, is this idea, and we shouldn't be too obsessed with competition, no founder should, but they have to be hyper aware of their environment into which they're walking, and still while it's less common, what does still happen, it is a real turn-off, is when someone comes in and says, hey, we have no competition, we're the only ones in the world doing that. And more often than not, when someone says that, we've seen half a dozen businesses doing exactly what they're doing. And if that's happening in Australia, then it's happening, we see them around the world. So be aware of the competition. The fact is, competition doesn't live just in directly analogous software. Everything's got competition. The competition could be pen and paper or Excel spreadsheet or something organic. It doesn't have to be software, but something that takes that mindset. So people who haven't sort of thought through the challenges in the world that or the environment in which they're walking, that can be a bit of a turn off too.
Sure. And I mean, obviously there's again a lot of sort of conversation and talk about what not to do when you meet with an investor. But I guess one of the things that I've kind of really enjoyed reading from some of your Medium articles have been some of the characteristics that you look for in startup founders. And there were a couple in particular that I pulled out. So the in pursuit of weird was really interesting. Can you kind of elaborate for those people that may not have come across that, that blog?
I will just very quickly point out that weird is said with love and admiration, and that's not designed to be funny, that's actually legitimate. The thesis, what that was trying to say is, if you look at extremely successful people, so they're not normal. Extreme success is not normal, and therefore the people who achieve it are not normal. Elon Musk is not normal. Steve Jobs is not normal. Mark Andreessen, they're not normal people. They're massive outliers in their outcomes, but also often in their worldviews and their personalities. They're not well-rounded personalities in the classic sense. They're actually really extreme on one end and perhaps underdeveloped on another. And that's what we in society think is weird. And if you're going to do a job like ours, you have to actually love those weird people. And that's why we started this, is because we actually love those people who see the world through a lens that we don't have, that society would think of as weird, and we think that's a huge positive. If someone's sort of normal and well-rounded and actually quite rational from A to Z, they're actually unlikely to be huge successes. So we, for a founder, embrace who you are. And the best do this without even thinking, is go, well, don't try and fit into a mould of what you think an investor is looking for. Don't come in and present how you imagine you should present. Come in and present as yourself. Because fundamentally, for us in particular, because we're an early stage investor, we're backing the founder. That's our core philosophy, is back the founders. And we want them to have that drive and that weirdness and that non-normalness to actually drive them to hyper success. And our job is to help them get there, and we help them get there with money, but really it's about helping them get there with support, that support of their own ambitions, their own dreams, and be able to say, look, the best support is to be able to say, look, we've been down a journey analogous to this before, and we see some potholes, and here's where they might be for you. Let's not make that same mistake that we've made in our past life together. Let's use that as ground zero and build on. So, as we say, we've made thousands of mistakes before. Let's not make them again. Let's make different ones together. But that in pursuit of the weird is a message to all founders to say, this is what we're looking for. We're looking for people who have the potential to be hyper successful, and don't try and fit into a mould. You're your own. Everyone who's hyper successful created their own mould, and but that's not to say that everyone out there is an Elon Musk or a Steve Jobs. Clearly that's not the case, but that's what we're looking for.
Sure. I mean, one of the things that really kind of struck out to me about that blog post in particular was the section on looking for the pathologically optimistic and the pathologically paranoid. And I guess one of the biggest things that I've kind of learnt from the first 50 episodes of the podcast is really the sense of balance. And a lot of investors have mentioned this as well, as, balancing the coachability of someone versus, the ability to take on feedback versus staying true to their vision. Is that something that you sort of hone in on when you're looking for founders? And if so, what do you have a way of testing that?
Yeah, when we sometimes say we're more psychologists than financiers, and it is all about assessing people. We don't have any particular methodology or test or study. We do that. We actually build relationships, but that balance is a really hard one to measure for, and it can only be done through relationship building and observation. And there is no right balance. It is just about having that. A lot of the founders we back tend to be quite data driven, so they're looking for outcome, they're looking for feedback loops, they're looking for signs of progress, and to be able to tweak and constantly tweak that progress. So they're very, very data driven around getting to where they want to go. But if you're very, very data-driven, you tend not to start a startup because the data says you're going to fail. So how do you find that sort of unique and quirky and weird personality that says, I'm so optimistic about what I see that I'm prepared to go out and put on a limb and go and work my backside off and sacrifice a lot of things to try and build it, yet paranoid enough to know that failure is just around the corner and got to be driven, the negative and the positive drivers. And that's not necessarily, that double pathological behaviour is not really a normal trait, but it is something we're observing in our best founders and a lot of our founders. And look, as you say, balance between commitment to your own pursuit and your own vision and take on. The point, people, no startup ever succeeds with just the founder. It has to have a team and it has to have people, and one of the traits of the great founders is the ability to bring great people around them. And partly that's having a great idea, and partly that's having a great ability and a magnetism through that idea or through the execution of that idea. It's not necessarily magnetism like we would think of a highly kind of, the person you walk into a party and the other person with all the people dancing around them. It manifests very differently in these kind of businesses. But it's the ability to actually recognise that no one can ever succeed on their own, and being able to find the balance that welcomes people in, that sort of vulnerability. More and more, I draw upon Simon Sinek, who I reference in a lot of my Medium posts, and the more of his work I read. And he talks about this power of why, or starting with why, and I'm actually a huge believer. People are drawn to a mission that's important. And that's very much based not just on human psychology, but from us as an investment thesis. If you're solving a big problem that matters, it doesn't matter if it matters to a huge amount of people or a small amount of people. Those people who believe in that same vision will come to you if you're executing well. And so it's a really interesting test. So the balance question is one of welcoming others on your journey because you believe what they believe or they believe what you believe, and being open to that. And hopefully that's us as an investor, but it's also building out an executive team and a growth team that's able to start to see the future that you see.
Sure. On that, so I guess the discovering your why can often be a journey on its own. For the founders that you sort of back or really like working with, is that something that's very clear for them, or is that something that you still find that they're still trying to figure out?
Through the spectrum, I don't think anyone's trying to figure it out. What they have trouble with is articulating it, because it's so much part of their DNA that it's like saying, what's it like? How do you breathe? It's like, you've got to describe how you breathe. It's actually part of their body. One of the challenges is actually drawing it out of them to articulate it. And oftentimes with the founders who have the deepest belief in their future, in the vision they see, they're the hardest ones to get to articulate. And that's actually sometimes what we spend, as Rab said, one of the things that we'll often do is spend a lot of time with the founders in helping them articulate that. And we see that being enormously effective in attracting the talent to the business and attracting the customers, but also developing the founders' language around the value proposition. It has all kinds of benefits. They build a better product, they have stickier customers, all kinds of things. That, and look, oftentimes, more often than not, the people who we're backing are product builders. They're technical engineers, and the language or the articulation side of things can be difficult, but it's in there. And our job is to actually find that.
Absolutely. Paul, once again, thanks so much for taking the time today to be back on the show and for being an early supporter of the podcast as well. For anyone that wants to find out more, get in touch, say hello, what's the best way for them to do that?
Jump on the website. It's rampersand.vc. We all have our contact details on there, where we have an open digital door, as the website says, and we genuinely mean that. Get in touch. Come forward. And I would encourage you to do a bit of research, as I said earlier on, about whether we're a good fit. But our mission is to help more startups get funded and get to success. A relatively small proportion will be funded by us, but that doesn't mean that we can't help you in some way. So do send us an email. That's usually the best, or give us a call, but emails tend to get answered better. Absolutely get in touch. And thanks to you, Rohit, for the whole program, and to all of you out there who are increasing in your numbers and getting behind this. It's a great process.
Thank you.
Cheers.
One of the most incredible stories shared on the podcast was the 4 years of struggle, or what they coined the lean years, that Justin Dry and his co-founder Andre went through in building Vinomofo. When I spoke to Justin in episode 3, they had recently closed their $25 million investment round and were about to start expanding globally. In this interview, we check in with Vinomofo's global expansion, their learnings over the last year, and the need to discuss failure. Hi Justin, welcome back to the Startup Playbook Podcast, and thanks so much for taking the time to be on the show today.
It is my pleasure, my friend.
So before we get into it, first of all, thank you so much. You were one of the very first people on the show as well. So a big part of us reaching this milestone was you kind of saying yes in those early days and kind of helping support the podcast. So thank you so much for doing that.
That's very generous. I'll take a small percentage, that's it.
So last time you were on the show, we were talking about you'd just raised the round and were looking at sort of expanding overseas, and I think you'd done your first few tests into New Zealand, I think it was. Just wanted to kind of follow up a year on and see how things have been sort of progressing with Vinomofo.
Cool. So yeah, New Zealand was our first market. I think we caught up in like July or something like that. I think we launched in August in New Zealand. So I think we tested the market a little bit with a pop-up, but we went full site opener I think in August. And went really well, made a big splash. We all, a big part of the team went over for the launch party, and since then it's gone really well. And I think I mentioned that we were going into our second market, or third market I guess, including Australia, shortly after that, and that was Singapore. And we launched in Singapore in December, and that was super exciting. Our first kind of market that wasn't like necessarily next door to Australia, being New Zealand, which I love New Zealand, but Singapore was just, it felt like, really quite interesting, like way different market. They don't have their own producers of wine over there, so it's just a different landscape to play in, and it's gone gangbusters. It's just killing it over there. It's growing so fast. It's really reminding us of the early days of Vinomo from Australia. There's this real excitement, and there's these like kind of group of early adopters that are just, loving the experience, and we held a launch party, and we're heading over there in a couple of weeks for another kind of get together with all the early adopters, and it just feels raw and real and like startup-y again, which I love, because that's a part of the evolution in a business that I just love. So it's really exciting to be part of that.
Yeah, I just listened back to the first interview recently, and I think one of the things that you mentioned was that you were talking about the process or what Vinomofo does is the best way to buy wine anywhere in the world, and so it's really exciting to kind of see you sort of spreading that. And
well, I'm glad you remember that line. But yeah, no, and it is really interesting in markets like Singapore that haven't had a player like us in there at all ever. They're paying way too much money for wine. So when you come in and do a super focused range of like kind of premium wines that we do, and present it with no middlemen, like we import, export, we are direct to consumer, so there's no one and no kind of margin that we give away, so all those savings go directly to consumers. So Singapore wine lovers are just beside themselves, because the prices that we can deliver on amazing wine is just incredible. So it's really fun to just completely disrupt the wine market.
Absolutely. So on that, like, are there any sort of lessons that you've picked up over the last, say, 10 or 11 months, looking back, or things that have worked really well, or perhaps haven't worked as well as you thought? Yeah,
so a couple of things. So things that haven't worked as well, we've probably realised, and we should have probably realised before we went over, but when you're not in market every day, all day, every day, building your networks, because what we did was we set up third-party logistics. We went over there for launch. We buy wines and supply wines for that market, but there was no one on the ground early, because that's what we were doing. We were just testing the market, and if it showed some traction, go all in. What we found is by the second market, we'd given up on testing the traction. We knew the market was there for us, but rather than testing the traction, we just kind of went full site straight away. It's a much better experience, even though we thought it was like super cool to be doing like these pop-ups. What happened was people would come in and go, "Oh, this is amazing," and then they couldn't buy wine for another month or two because it was a pop-up. And then they'll be like, "Oh, we better go back to our place that we used to buy wine in the meantime." So I think one lesson is like we've gone all in while not being silly with money or risk. We've gone all in quicker and just given the full experience as soon as we could, because that's what's made Australia so successful. we want to deliver that whole experience to each new market as quick as we can. So that was probably a lesson. Another lesson I think is around how you scale up, or how you start in a market and how you scale that early start. You know, when Venmo from Australia is a big business now, and medium-sized business, and it feels like going back to the grassroots of startup kind of mentality when you go into a new market, and it's really exciting to start with your first 1,000 customers or your first 100 or whatever your number is that makes sense for you as a startup. But for us, our first 1,000 customers again is really exciting in your market, and realizing what you need to do to make a success from 1,000. It's not, Vino Mofo, the medium-sized business comes in and all of a sudden it's a medium-sized business in a new market. You actually go in and it's raw again, and you have to go it's almost hand combat. You're in again, you're meeting everyone, you're going into, you're building your networks again for the first time. You've got intros and you're better connected than we were at the start of Vino Mofo, but you're still new to the market. You've got to meet everyone, you've got to know people in the space, in the startup space, in the wine space, and then you've really got to make the most of the early adopters that are falling in love with your brand, to get them to introduce you to their friends and other wine lovers, as opposed to let's just spend some money on Facebook or Google or whatever. It's back to those really fun times when you're building true relationships with the early adopters.
Absolutely. In terms of building those true sort of relationships, has that, or kind of the shift in strategy as well, has that shaped at all the way that you kind of approach the new market, or potentially sort of, I don't know if you're making hires within those sort of new markets? Or
we've done, we've gone back and forth a little bit on this, but originally the plan was work out whether there's traction, go full site once there is traction, and then hire teams on the ground. And then what we did for a while was, or what we did in New Zealand was, we did exactly that, and then we realised, no, actually, let's not test the market like we did with the pop-ups because of that experience I was talking about before. Let's open up the full site and full experience. But then we built relationships on third party for the logistics side, so warehousing and delivery, without setting up country leads. So now we're kind of coming around to working out that it's different for every country, for one. Country lead in New Zealand probably makes sense because they've got their own wine industry, so a really great lead who can also talk to the wineries and be a crossover as a buyer and help bring in great New Zealand wines, not just within their market, but into Singapore and Hong Kong and Australia, is a real asset. Now, Singapore is a little bit different because they don't have that market. They don't produce their own wines. So I don't know. So we're still learning. We're still working our way through those, but it's definitely different for each market. So I think we're learning still. Sure.
Is it? I guess when it comes to sort of international expansion or kind of growth of that size, especially when you're going into new markets and bringing on potentially new team members and approaching things in a different way, how do you kind of balance that with keeping the same sort of culture or the same sort of vision of what you sort of have here?
Yeah, well, I mean, this is so important to us, and so it's been a topic of discussion lots, and we've gone really deep into it. And I think we've wanted to build up in each new territory to a point where the teams on the ground made sense, as I've previously said. But when we're looking at hiring into new markets, they're definitely going to be spending a lot of time with us in Australia first. It's not. We really do want to follow the culture and the way we do things through each of those markets. So it's really hard to get that, and we even see it in different office locations around Australia. We've got a small one in Adelaide. We've got the main office in Melbourne. We spend a lot of time travelling, and you can see when businesses have separate offices. Even there's a subculture within that main culture that kind of builds, and it's. I think you need to place a lot of importance on and focus on what you want the culture to be and what you want the value system to be within your business, and you need to drive that home all the time, regularly, and constantly in front of people, and constantly using it as an example and a way to determine what is and isn't right when you're making decisions. So it's hard. It's definitely been challenging, but I think you can get it right. You just need to put the right kind of emphasis on it.
Sure. One of the biggest bits of feedback that I got from our first chat was just your openness of kind of talking about the lean years with Vinamofo as well. And obviously kind of since then there have been a lot of great initiatives that have launched, like the Fuck Up Nights in Melbourne. I was recently on the Pathways podcast as well, where I was kind of talking about my own sort of story with Stage Label and that sort of struggling over the 3 years. But how important do you think it is for the community or the ecosystem as a whole to get comfortable with kind of talking about that failure?
Super important. I think it's one of those things that is hidden more in Australia than it is in a lot of other places around the world. I mean, I hate it how everyone references like Silicon Valley, blah blah blah, but it's failure and openness about that is far greater over there than it is in Australia. I think it's changing. Lots of people are talking about it now, which is awesome because it also makes everyone human. If you just don't talk about any of the stuff that went before and all the failures that we've all had, you can come across as like not human, superhuman, in a sense, and it's just bullshit because we've all fucked up completely and so many times. And you want to encourage young people to one, have a go, but two, know that they're going to fail, fairly regularly until they get to a point where it succeeds. And I replied to a guy today actually on email. He was launching a mobile app. He'd spent like last 10 or 15 years in the army, and he'd been working on this app for like a couple of years and like bootstrapping it. And he'd been pitching to investors, and he was really struggling to stay motivated. And so he was just like, just any piece of advice would be amazing. So I just started writing on my flight back from Adelaide this morning. And I ended up writing like pages and pages and pages. This poor guy's probably, what the hell just happened? He's got like this whole book back from Justin. But it was all about that. It was all about how it's, making decisions around when's the right time to give up and where your belief has to be, whether it's in your product or in the person. So, and I was saying, and this was just spilling out of my brain. It wasn't well thought through. It was just, this is how I feel. And I was like, our first business as a business model really sucked, and then the second and third and fourth were getting better, as I said to you previously. And I think that each was a learning experience, but we weren't tied to the business model or that particular business. We were tied to the belief that we could do it at some point. We were going to get better and actually learn and create a product, and then the timing would be right that it would work. So that was our belief. So it wasn't like we were just like bury our head in the sand, it's like whatever I hear or feel or the market tells me, I'm not going to listen to. Because I think it's really important to listen to the market. I think it's really important to know when it's just not right. Your product sucks, or you need to pivot. And so I was saying to him, look, we had to pivot 4 or 5 times before we got there. Everything was a learning experience. So please, be realistic. Don't be it's really hard not to be biased when it's your own product. But get feedback around the market, get feedback from investors, get that feedback and work out whether or not this is the thing. But just don't lose faith in yourself, because even if this one doesn't work, the experience is amazing. You've now pitched to investors. Like the investors we pitched to on our first one all said no. And then the same investors 5 years later all said yes. And so those relationships and experiences are so valuable later down the track. You may not think it at the time, but they're all kind of lead to what hopefully one day is a great success.
Absolutely. I think, so I was at a round table talking about, what can we do to help develop the ecosystem. I think it was put on by Startup Australia. And so one of the kind of points that was brought up was, everyone kind of is talking about bringing people into the startup ecosystems. How do we get people out of corporate into startups? What isn't talked about enough is, the high failure rate and what happens from the learnings that you're picking up after your first failed startup. And how do we incentivize people or keep people around long enough to utilize the learnings that they've got to apply to their second, third or fourth business where you kind of see the real value being created. Yeah,
absolutely. It makes a lot of sense because you can't buy that experience. It doesn't matter how much someone tells you what it's like to go through failure or what it's like to, all those little moments and times when there's stress or when you're on the brink of something amazing and it all falls down, and the days you wake up and you're super excited compared to the days you wake up and everything feels shit and you don't want to face the day. Like you can't buy that experience. So I think there's a lot of value going out of the community if we're not encouraging the first, second, third time failures in a business sense, not as humans, to stick around, because that's like, how much have you learned through your stuff that you've stuffed up? That's where most of my skill set comes from now. Oh no, I've tried this before, don't do that.
Yeah, absolutely. So final question actually comes from one of our listeners. So Jesse Wilson wanted to know if you were to start an online business again, e-commerce or something like Vinomofo, how would you go about it, and what would you do differently?
I would, and I don't want to sound too cliched, but I would definitely find an area space that I was super interested in, because I've played around in lots of different spaces over the last kind of 5 years, and just touched on them, whether it's investor, advisor, whatever, and I find that I'm not that interested unless I'm interested in the space. You know what I mean? Like, I'm not an investor for a return type kind of thing. I need to be super interested and passionate about that space. So firstly, I'd spend a bit of time kind of working out what I could get up excited about every day. Second, I think that over time with Vinomofo, I've learned how crucial and how important it is to be super focused in what you want to achieve and have like really lofty ambition. And then three, how important building a great culture is, and looking after your team, and really getting up the front and being a leader in a sense where you say, here is what we want to achieve. How do we make it possible for us all to get there? As opposed to, do as I say, not as I do. Great leadership's something that I think you learn over time. And Andre and I have been guilty of plenty of things which wouldn't be described as great leadership over years. But I now know how important it is for everyone to believe in what you're trying to do. So probably, so find something you're passionate about, focus on the team and the culture, test everything and ask heaps of questions. Don't be embarrassed about all of that stuff. What else? What would I do differently? Well, I think I'd cut a lot of mistakes out of what I did, which would be nice. I think that outside of what I just said, what would I do differently?
Well, I think your response in the first one was that, because I think I asked you if you had known what you knew about the business model and where sort of things were heading, do you think Vinomofo would have been as successful if you had kind of done that from the start versus spending the 4 years? And I think you'd mentioned that, like, the relationships that you built, the community that you built.
Yeah. And I think it is really funny, because I think you do need that experience and history you don't need it, but it adds tremendous value. So I think I wouldn't be so impatient to get the thing right in the early days, because I think we just thought it was perfect from day one, and we were like, no, this is definitely going to work, and we were thinking about it from our side of the fence, as opposed to on the other side, where we're actually supposed to be delivering some value to people that were coming to the site. So I think I'd think about it differently in that sense. I'd be more patient. I'd be more open to help and asking questions. We felt like we had to do everything ourselves, and that probably just added a whole heap of time and stuff ups along the way. And I think I'd just speed up everything. You know what I mean? I'd speed up the mistakes, I'd speed up the help, and I'd get there. I think I'd get there quicker. I'd hope so this time around.
Fantastic. On that note, Justin, thanks so much once again for being on the show. For anyone that wants to get in touch, say hello, find out more, what's the best way for them to do that? Probably
Twitter, which is just Justin L. Dry. Instagram, which is Justin Dry. Facebook, I've got a page that they can get in touch with me, and I'm generally pretty good with getting back to people on those channels, so happy to.
Perfect. I'll make sure those links are in the show notes. Justin, thanks once again.
Thanks, buddy.
Cheers. And finally, we come full circle and go back to our first ever guest, Tim Mundy. Tim is the co-founder and director of Digital Affair, an HR branding company that has gone through incredible growth since launching 3 years ago. In this follow-up, we talk about retention, over-delivering, and getting by giving. Hi Tim, welcome back to the Startup Playbook Podcast, and thanks so much for taking the time from your just coming back from your recent trip to be on the show.
Yeah, thanks mate, no worries.
So you were the very first guest, so I feel like we've just come full circle on everything from about 11 months ago. Yeah. I obviously get to kind of see you on almost a daily basis now, since we're kind of working out of your office space as well, but for those people that kind of listened to the first episode, do you want to give them a kind of a rundown on what's been happening with Digital Affair over the last 10 or 11 months?
Yeah, no worries. Yeah, it's been a big year for the business, for the work that we do, for our industry, for the team. And so the list is pretty long of things that have happened in the last 12 months. But I guess to summarise, I think last time we spoke, we were going through a lot of growth, or what I thought was a lot of growth. Probably the last 12 months has definitely been the most growth for us. We're just coming on to 3 years now, and it's fair to say the last 12 months was easily, the biggest. And the last 6 months for us, in fact, since we came back from Christmas, has been absolutely massive. So lots of new clients. Lots of global brands now working with us, and a lot of the business that comes to us, in fact all of it, is inbound. So we've got a brand now that apparently people have heard of. They're able to find our details, and they're sort of coming and asking if we can work with them. So we have a wonderful stream of new business coming in every day, which is good for us. We've grown the team. And we've been really careful around how we've done that. So we were always really firm early on, but still are around not just growing, by numbers for the sake of it, to be really careful with who we bring into the business and keep the quality of person that we have in the team. So we've managed to sort of triple the amount of work that we do, but really only add a couple of people to the business. So that's been really nice for us as well. We've moved into our own space now, so we sort of graduated from the co-working world, which we absolutely loved, but we now have our own nice big space. And it's big enough that we've been able to bring in our friends like yourself, some of the startups that we're invested in, and I guess the community of people that we'd come to love working with in those co-working spaces, we're able to bring along with us and all be in the same place, but it's ours. So it's nice having that kind of permanent home, which is great. We've opened up offices in Sydney and Singapore, so I've been travelling a huge amount to those places and getting our operations set up in those places. We're working in different countries now that we don't even have a presence in. We do a lot of work now with the big brands in New Zealand, so working with Fletcher Building and Lion over there has been really awesome. Meeting a different culture and working in different environments and that sort of thing. We're actually on the tip of opening up an office in London, and we had a lot of interest in the UK and Europe from some brands over there that are keen to get started with us. So demand is drawing us across into Europe, and we've still got some very big plans for the US in the next 6 months or so. So it's been wonderful, and yeah, just the growth has I guess continued to inspire us every day and help us realise we're in the right place. And then on top of that, we're really just diversifying what we do. So I think when we last spoke, we had one investment in another startup called Video My Job. We now have 2 more investments in 2 other startups, which are really exciting for us. So in different industries as well, which I really like. So it's been wonderful to get more involved in the startup scene. And then on the whole, I think we're just doing a lot more education as well. So still spending a lot of time mentoring, working with startups, spending a lot of time in our industry working with our clients and educating them, and spending a lot of time working with graduates in different universities and doing lectures and that sort of thing. So getting a lot of chances to share what I've learned over the last 12 months or so, which has been good.
So just a standard run-of-the-mill year. Yeah. But I guess one of the things that we were, so I guess kind of looking at things over the past year and thinking that, back a year ago, I was kind of blown away by everything that you'd sort of achieved up to the 2 years till now, and just seeing the progress that you've made even further within the last year. What do you think has kind of led to such a large and consistent growth with the business?
I think humility. So, confidence is great. You don't want to become arrogant, and so we've been able to sort of, whilst we've had a huge amount of success, we kind of all still always feel like we're still this little startup that just started, and really it feels like only 5 minutes ago that we started. And so a lot of the time we're still overly appreciative to even be involved in the space that we're in. And so that sort of sense of, I don't know what the word is, but it's like that sense of like wanting to belong to the space you're already in is sort of continues to drive us. So that's where we get the sort of passion and energy from. And I guess we set some really big goals for ourselves that are reasonably big, and so we haven't reached those yet. So that continues to motivate and drive us. And I think the interest that we've had from the industry and in particular the success we've had with our clients, like we're winning awards now for our clients. The startups we're invested in are winning awards, and so we're getting a huge amount of recognition for what we've done, and validation as well. And so that sort of gives you a fresh bout of energy to go out and do more and more. And so it's just not showing any signs of letting up either. So we sort of match our energy to the interest in our business and sort of go from there. And it just seems to get busier and faster and take more energy. And that's just, for us, a really good thing.
Absolutely. I mean, one of the incredible things that, like, we were just talking about before we turned on the mic was that no one really leaves digital affairs or once they become a client.
Yeah.
And that's such a big part, especially in a service-based business. That's actually really, really difficult to do.
Yeah.
What is it that, from your perspective, that keeps sort of clients wanting to stick around?
We over-deliver. Yeah, and I don't want to ever change that. Early on we over-delivered because we wanted to impress. So you might do work at a low budget and then deliver 10 times more than they asked for because you're trying to impress big brands. As we've secured those clients and didn't need to do it anymore, we actually continue to do it. We had a meeting the other day with a client who said, actually probably our biggest client, who said to us, 100% of the time that we've ever done anything for them, we've not just met their expectations, we've over-delivered for them, and that's why they trust us so much. And so I found that we're able to do that by always, I guess, asking ourselves, like, how do we do that better? Like, I know we delivered it last time and the client loved it and we could create a product out of that people would continually, get value out of, but how do we outdo ourselves every single time that we deliver something? And so out of that, our products evolve and we see innovation coming out of that. And so I think the loyalty comes from obviously delivering, but also like our clients wondering, well, what will we get from them next? If that's what we got and it blew us away, I need to stick around and see what we get next. And so because of that, we just have this really intense loyalty, with the business. And I think last time we spoke about the importance of friendships and the partnerships that you have with your clients, and those have evolved, hugely for us as well. And so I think that when your friends, great to be around, you're going to continue to do that. And so much so that, I had a new client ask me the other day, how long does our contract last for? And, what are the sort of, technicalities of the contract and that sort of thing. And I had to explain to them that we don't have contracts. If you don't like working with us, then you shouldn't. And I'm not going to lock somebody into something that they don't want to be part of. And we just, everything's open-ended. And yet we have 100% retention of all of our clients. And they've been with us for the, 3 years or for some of them, or most of them since we started. And so I think that, that just delivery, that relationship that we have with them and helping, and they really realize that they're tapping into, what's going to be best for them and what's the latest thing you could be doing. And so they have an insatiable appetite for that and we're able to meet it. And so we just get this intense loyalty out of it. So, and it takes the sort of the business side out of it and really proves that it's a friendship built on trust, where we're not ringing them up after 6 months and saying, do you think do you want to renew with us? Do you want to keep going with us? We manage that relationship every single month and have that conversation every single month so that we know that everything's going to be fine.
Yeah. One of the other things that we kind of spoke about was obviously a large part of Digital Affairs' early traction was built on your own sort of brand and your own sort of networks. And one of the things that we sort of discussed was how do you scale that to your team?
Yeah.
And I think from the sounds of it, like the trust element and the relationship building, that I see this on a daily basis in the office with Lockie and Lucy and things like that too. Like it seems like that's sort of permeated throughout the rest of the team.
Yeah, it's just you bring in people that you trust and that have the same ethics and morals as you. Now, a huge part of being able to do that was when we developed our values. And, when I worked in the corporate world, I didn't believe in company values and they were meaningless words to me and you weren't connected to them. But once we worked out what our values are, and I don't mean Digital Affairs values, I mean the people that work together, what are our values as people? And once we connected to what those were and sort of formalised them, it really helped us bringing in the new people into the business to sort of say, hey, there aren't really any rules here, there's no hierarchy, but we have a set of values that we live by. We think they're pretty good, and we think that anyone should live by them. And if you believe in them, then we know we're going to end up in the right place. And I've been able to show our clients that we have that in the team as well. So there's been a big focus on me getting that initial relationship going, and then really transitioning the team into manage it day to day, and to be that interaction that the client has. And it's just incredible to look at the strength of some of the relationships, or all of them, that the guys have with these people that sometimes they've never met face to face, or they know really well because they're just around the corner sort of thing. But that we've got this ability for our people in the team to be given a chance to build relationships with people all around the world, and that they can do that well. And it's been really nice to be able to sort of take that anxiety out of, or is this just Tim's brand that's building this business, and really realise that it's not. It's me that opens it up as a conversation, but it's the guys that deliver on the promise, and that they're able to do it time and time again.
Sure. And again, this is things that we kind of spoke about in the very first interview. Was the fact that you don't need to do sort of business development at all, focus on sales. And again, you sort of touched on this of you having the time to sort of mentor and do different things. Do you think that not having to focus on the business development side allows you to open up to more kind of longer term strategies, which positions you even further for success and growth?
Yeah, it's been really good because, we get so much repeat business from our clients, existing ones, so we're able to build those out. And then we get so much inbound interest, sort of day to day, that instead of worrying about, how am I going to sell enough to meet this month's budget, I'm able to start thinking about, okay, if we're here to stay, where do we want to be in 5, maybe 10 years' time? And so we're able to start playing a really long game now. And that's been a lot of fun, and it's super interesting to sort of think about in a really open way, where could we be in 5 years' time? And we're careful to do that as well, because we always remind ourselves that there may not be an industry for us in 5 years, and if we intend on being around, then we should start considering what else we might do. And that's where we get these diverse ideas coming out, and we go from being a service business that does consulting to suddenly like today we're creating digital products that we never thought we'd be doing, but we just had the knowledge to do it. So it's super exciting, because it means 1 month to the next, you don't actually know, what you're going to be doing and providing to the world.
Yeah. It's really fascinating. So even just looking back to a year ago, even outside of the podcast, we were catching up regularly. And so one of the things that I would ask you was how do you get to that position of people coming to you? And obviously I'm sort of starting to see that a little bit myself, but from your perspective, being so much further down that journey and having done that for so long, for someone who's at that very early stage, what should they be doing? What should they be focusing on?
Yeah, I think there's two things. There's what you should do, and there's also how you should be as a person. And so for me, it's sort of one and the same, in that it's a giving thing. It's I think I probably said it last time as well, and I do say it to all the startups that I mentor and the younger people that I work with from the universities, is if you want to get, it's all about giving. I still invest so much time, and obviously for the last few years have invested huge amounts of time getting out, talking to people, and just giving my expertise and knowledge. So that might be mentoring clients that don't need to work with me, that have their own internal teams, but still helping them anyway, because I know those people talk, and that people share things in industry, and I can prove that's the case. We had the biggest, arguably I think the biggest company in New Zealand was looking for a business that does what we do, and they got in touch with what is probably the biggest bank in Australia, because they had a relationship with them, and said, hey, who do you guys use for this sort of stuff? And those people said, well, actually, we have a retained agency that we use in that space, but we don't like working with them. And if we had a choice, we'd work with Tim and his team, but unfortunately we can't do that. But if you're asking us for a recommendation, we'd recommend you don't use our agency, you use this one we've never worked with. Now, I know that's because I spent a lot of time with that bank, educating them and helping them around what their challenges were, so that they could, go about being successful in their jobs. And hey, look what happens in the long run. So I think giving is the most important thing that you can do, and I think going about it with passion and confidence is where the difference is made. I think that when I think about the people I see being successful as well, and I think about how we go about things. I really think it's showing people that you know what you're doing, you believe in it, you think it's the best, and that you care about it. It makes a huge difference. So yeah, just being confident and going out and sharing has been so beneficial for us, and it's just personally satisfying to go out and help people. Like, why wouldn't you want to do that?
Yeah, and it's the whole kind of like message of authenticity around that. Like, you can't expect something in return straight away, otherwise, people can see right through that.
Yeah.
And it doesn't really work. But
it's interesting. Like, I think Gary V, I think you're a bit of a fan of his as well. Like Gary Vaynerchuk, I think is how you pronounce his name. He wrote a blog the other day about. How are you successful, Gary? Like, he gets asked this every single day. And he's like, to be honest, I'm kind of sick of being asked the question, because I tell people every single day, it's going out and giving and building trust and being authentic and sharing your story. That's literally all you have to do. And he's been saying it, and I say it, and so many people say it all the time. And yet we still get asked the question, how do I get to where you got to? And it's about not reading books. It's not listening to people like me. It's going and doing. It's going out there and being yourself, giving, sharing, all these sorts of things. It's seriously hard work though. It's you've got to get to a point where there is no line or distinction between your life and work anymore, and nor should there be if you're genuinely doing something that you love. As soon as you can break those barriers and just live and breathe what you do and care about it every day, success is always going to come from that. And you see people with mediocre products and services all the time be successful because they work so hard at it. It's like when you finish school and you think, how do people get into medicine and get into law, and you think it's this natural born ability that they have, and you think, they're just smarter than me and all these sorts of things. But once you get out into the world, you very quickly realize that you can do most things in this world through hard work and repetition. And it's no different when it comes to building businesses. It's get out there and make an effort, because not only does the volume help, but the more you do things, the better you get at them. I wasn't great at networking the first time I did it. I wasn't good at sales and pitching and talking and selling when I first started doing them. But you do them 1,000 times and inevitably you're going to get better at them, and you'll remember the bits that were good and that people liked. What that all translates into is just 2 words, but it's 2 4-letter words that people don't want to hear, and it's hard work. That's it.
Yeah, I was just listening back to our first podcast interview, and I'm like, oh my God, I can't believe that I was that bad. But you kind of work at it, and you hopefully sort of make incremental improvements over time. But also another aspect of that as well is I think people focus on, you obviously had years of experience within the space, and you had sort of built networks, but everyone's got their own sort of advantages or their sort of unique perspective on things, and it's just a matter of finding out, again, how can you add value to people. You don't need to be the best thing in the world for everything, but what's the one thing that you're uniquely good at that you can help people with? Yeah,
it's understanding how to articulate what your key strength is. I do a lot of work with, I'm really lucky actually, at the moment I get to do a huge amount of work with CEOs from all sorts of different organisations around how they develop their personal story and their personal brand to enable them to be more successful and to show their organisation who they are and all that sort of thing. And it's, it all comes down to the same thing all the time. It's like you really need to work out how you tell people what it is that you do and what you are. And when I think about the startups that I work with, when I think about the ones that don't have a strong pitch or that aren't being successful, so much of the time it's because they can't tell me quickly and with confidence what they do for people and how well they do it, and that they do it well, that they're the best at what they do, because they should be if they want to be successful. And so, understanding how to articulate yourself and what you do, I think is really important, and people need to spend more time on it, because people just want to know, like, if I'm in this busy world that we live in, if I'm going to spend my time and my money on you, tell me what you're going to do for me. That's what they want to know.
Absolutely. On that note, Tim, once again, thanks for being on the show and for sharing Digital Fair's incredible rise. For those people that want to find out more, get in touch, say hello, what's the best way for them to do that?
Yeah, thanks for having me, mate. As always, the best way to get in touch with me is look up Tim Mundy on LinkedIn or look up Digital Affair on Google.
Perfect. And thanks once again for being a huge supporter of the show.
Always. Thanks, mate.
Yes. Thanks for listening to episode 50 of the Startup Playbook Podcast. You can find the show notes of my interview from all of these guests, along with a curated list of tools and resources for startup founders at startupplaybook.co. As always, you can join the conversation through our Twitter account. The handle is @PlaybookStartup. We're back to our normal format from next week, and for episode 51, my guest is Adam Stone. At just 22 years of age, he's already built several successful businesses, has gone through the highly competitive 500 Startups Accelerator program, and was recently named in Forbes Asia 30 Under 30 for consumer technology. He's currently the founder and CEO of Speedlancer, the quickest way to work and get projects done with high-quality freelancers from around the world. Don't forget to subscribe to stay up to date with our latest episodes. Thanks for listening and for your support over the first 50 episodes, and I will see you at episode 51 next week.